Live from Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Fed Chair Jerome Powell says he is in no hurry to cut interest rates, with the U.S. economy doing well. But he refuses to weigh in on the risks posed by Trump's tariffs and other policies. Alibaba shares in the spotlight after a report that Apple is working with the e-commerce giant to roll out AI features on the iPhone in China. That stock up about 8%. Also ahead, Marriott International's APEC president will be joining us exclusively to discuss the expansion plans for Southeast Asia as travel out of China and India pick up. Plus, as funding for AI startups booms, is it coming at the cost of green energy investments? We'll ask the CEO of carbon recycling firm LanzaTech. Our top story today, Fed Chair Jay Powell is still preaching patience when it comes to the pace of rate cuts. He testified before the Senate Banking Committee that there's no rush to lower borrowing costs, with the U.S. economy strong and the labor market not a source of significant inflationary pressure.
Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. Longer-term inflation expectations appear to remain well anchored. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
And markets in Asia mulling Fed Chair's comments higher for longer. We have the Asia-Pac benchmark currently up a tenth of 1%. Of course, trepidation on the back of Fed trajectory. The Fed, of course, as we heard from Jerome Powell, not in a rush to lower rates. But really, it is about the bond market story. We're seeing a rise in yields in Asia in tandem with what we saw in the U.S. market. In fact, when it comes to those yields in Australia, 10-year yields up about 7 basis points right now. Yields also trending up in New Zealand. And in terms of FX, we're seeing Asian currencies, in particular emerging market currencies, under pressure. No doubt we saw the easing in the dollar just yesterday, but not enough to provide big relief among Asian currencies. In terms of the yen, trading at 153.49 versus the USD. Now, traders looking ahead to that CPI print to perhaps gauge where the Fed goes from here. Let's get perspective, insights from Selena Ling, OCBC's chief economist and head of global markets research and strategy. It is about the Fed, it is about yields, it's about everything that has to do with Trump.
Well, it certainly is a very choppy start to the year. I mean, we've had a lot of rhetoric coming out from Trump, and I think the Fed is really reacting to what the potential inflationary impact of these tariffs will be. So we see new tariffs being unveiled, right? First it was against Mexico and Canada and China, and then now there is steel and aluminum, and he's hinting at more to come in terms of reciprocal tariffs towards possibly the EU and also Japan. So market really has to brace itself.
The thing is, the equity market seems to be pretty resilient. No matter what Trump says, it just finds an excuse to go higher. But we're seeing yields trending higher as well.
Well, I think they're reacting to different factors, right? The Treasury market really is reacting to the potential inflation down the road from all these tariffs, whereas the equity market likes the AI story, and we're seeing a lot of the stocks that is reacting to the potential for greater AI, productivity gains.
So in terms of yields, let's unpack that a little bit more. How do you see yields trending from here? What considerations will dictate the bond market?
Well, the front end really is driven by market expectations of how much more the Fed can possibly cut from here. So we have seen that the futures market has really retreated further, post non-farm and post Powell's testimony as well. Basically now the total cuts that they are expecting for 2025 has dropped to around 36 basis points, which is barely more than one cut, and they are expecting the first cut not to come, anytime until September this year. But on the other hand, if you look at the longer dated yields, we already got a hint of that. The earlier University of Michigan inflation gauges, both for the 1 year and the 5 to 10 years, have already started reacting to the potential of these tariffs, and they are starting to price in a higher inflation story down the road. So Trump's tariff policies seems to imply rates on hold longer, and if inflation really makes a comeback, then that could be bad news for the long end of the curve.
The thing is, Selena, we started the year thinking perhaps we'll see, 4 rate cuts. Now it's down to 1 this year, if that. The question really is, should we be perhaps considering the option of the Fed raising rates, given the kind of tariffs that we are looking at Trump? I mean, he's talking about more tariffs to come, which pretty much are inflationary.
Well, there's a short-term story and a medium-term story. I think the short-term story is not quite yet. I mean, if you remember in the December dot plot, the average median rate cuts they're still looking at is 2. So I think it's quite critical that, we get a CPI print out tonight, and then we'll get one more before the March FOMC. And actually, we expect further softening in terms of the core CPI prints. But the March FOMC would be very critical. Okay, first, in terms of the economic projections, are they going to be factoring in a higher inflation story from here? And then in turn, how would that affect the dot plot? So are they going to, shy away from 2 cuts and move somewhere, to be a little bit more hawkish? I think that would be key to watch. But generally, I think we are not quite there in terms of pricing in Fed rate hikes yet, because until we see a reversal, a lot of the tariffs now is, the to and fro. They announce something, and then the art of the deal making is that the countries that are targeted come and say, okay, let's make a deal, right? And then they get a temporary stay, or they say they get some exemptions. So the actual impact, I think, on the inflation will still be some time down the road. It's not clear whether for a lot of these countries, will they just choose to absorb some of the tariff impact, like what happened during the trade war 1.0, or actually are they going to pass it back on to the US consumer? But of course, the magnitude of the tariffs we're talking about now, especially if it's reciprocal or universal in nature, some of it will come back and probably hit the US consumers. But it may very well be a second half or late 2025, possibly a 2026 story as well. So I think rate hikes probably not just yet.
We talk about the trickle-down effect. What effect are we seeing in this part of the world? We've seen how central banks, for example, Thailand, keen to cut rates, but it's getting really difficult, especially given where currencies are trading right now. We have the Indian rupee, the Indonesian rupiah, all under tremendous pressure, among the worst performers in Asia.
Well, it's very much reflecting a dollar strength story. A dollar is kind of in a range right now because the Fed is on hold, and there's no sense of when the new tariffs are going to be not forthcoming, or whether the Fed is going to return to its rate cut story again. So emerging markets tend to get the brunt of that. But it is interesting because if you look at certain economies like Bank Indonesia, for instance, in the past it used to be very much a currency stability narrative, but they have pivoted. So when they cut rates recently, they basically said that, well, we are going to be pro-growth from now. So to them, I think there's a little bit of a trade-off on the currency stability front.
So how does the future look like for the rest of 2025? I mean, with the Fed holding rates higher for longer, it's going to be a mitre dollar story. It really begs the question, the dollar, how much more, can it rise from here? And what does it mean for Asian currencies? And which crosses are the best ones to play?
Okay. I don't think it's going to be a smooth sailing for the dollar per se, because I think increasingly the Fed pause story is already being factored in. And in terms of the tariff, yes, there's a bit of that market reaction. But actually, if you look at the glass half full, China only got 10%. They didn't get the 60% that was threatened, right? And it does look like as we go along, if countries are willing to negotiate, if you put more guards as a security to curb the inflation and drug inflow, they're willing to get a stay on the tariffs. So there's a little bit of that trade-off. So if you look at the dollar action, each time there is a new tariff being announced, the dollar strengthens, but it comes off quite quickly. So I think it's either a market fatigue building in a little bit, or their expectation is that the tariffs are just the parlay to an actual deal.
So how do you see the dollar moving, and what's the target for 2025, end of 2025?
Well, we do think that the dollar from here probably will be a range for now, okay? Like I mentioned, the Fed pause is already increasingly factored in. And for tariffs, if it's not exceeding what was initially promised, which was really 60% on China, 10 to 20% on the rest of the world. We haven't really seen the rest of the world part yet. And for China, it's still 10%. So I think unless we get tariffs exceeding what the initial levels were being threatened at, I think the dollar probably will still be supported. But I'm not sure that we're going to see a one-way street for dollar all the way from here. So I think current ranges, it's about there.
Given all the uncertainty, people are taking shelter in the dollar, in the Japanese yen, but it's quite complicated for the yen, given that tariffs are coming, and it depends on what the BOJ does from here as well. How will this play out for the yen?
Well, I think the BOJ is quite clear. They still want to hike rates. They're coming from a very, very low base, so we do expect them to get to 1% by the end of this year. But the overall yield differential against the dollar is still quite wide, even if they get to 1%. So I think it's going to be a very mixed story. Yen's on a bit on a run recently. I mean, the economy is doing better, and wage growth has been coming in slightly stronger than expected. But overall, I think the dollar still trumps everything, right? Because each time you see Trump announcing a new tariff or, basically there's a flight to safety, the dollar still benefits from that safe haven flows. So we think that the yen will be quite choppy. Possibly we could see some profit taking on the yen.
So in terms of expectations, what's been priced in already in terms of the rate hikes by the BOJ? How much is that already reflected in the current level of the yen?
I would say that a fair bit has been priced in already because data-wise, like the wage front is surprising a little bit on the upside. But as far as BOJ rhetoric is concerned, I think they have signaled quite clearly they're going to continue hiking, but at a snail's pace.
And the JGBs?
Well, JGBs, I think to a large extent, will probably trade off the overall yield story, which is really what's happening with the longer-dated Treasury yield bond, being pressured higher because of inflation coming down the road. I mean, if you have basically universal tariffs and tit-for-tat retaliation that's ongoing, it's very hard not to see structurally higher inflation from here.
Interesting, we've been talking about how traders are looking for havens, and one haven that's really benefited is the gold. Yeah. Headed towards 3,000, it's just a matter of when. People almost are certain to say that, that could happen by the end of this quarter. How much higher do you think gold can go?
So gold is very interesting because if Fed is on hold, typically gold, should not be outperforming, right? But I think it's
a lot of risk out there, Selena.
So the world is full of moving parts, right, at this current juncture. So if you are not sure about overall dollar direction, if you're not very sure about the Fed trajectory, and you're not very sure that US and China won't go into a fuller, trade war kind of scenario, gold seems to be the fallback option. And it's done very well last year and this year as well. So I think our preference is that, if there are any pullbacks, we would prefer to buy on dips. I think the 3,000 handle is one that is very much talked about in the market. A lot of people are positioned for that already.
And of course, gold is also driven by how central banks are buying gold. China, case in point, but it is not just China that's buying gold. So this could propel gold to go even higher.
Yes, I think that's possible, but I think if you look at the overall story, central banks have been accumulating gold for quite a few years already, right? I think it probably all started with the whole Russian sanctions and people fearing, where can they diversify their US dollar or US Treasury holdings to, and gold was a very main key beneficiary of that. But going out from here, is China going to continue to step up its gold purchases? So interestingly, in the past, if you look at the onshore and offshore gold prices, there was a little bit of arbitrage that was ongoing, but that premium has really compressed. So I think the Chinese onshore demand for gold is also starting to taper a little bit. Maybe it's a reflection of the weak economy and the domestic consumption story. But I tell you, that suggests that don't bet on China market being the key propelling force for gold prices going higher from here.
What's interesting about the China market is the kind of run it's had since the beginning of the year, up 14% since the low we saw in January. How convincing is this? Have fundamentals really changed to justify the gains we've seen so far? No doubt, driven by the tech plays.
Yeah. So I think if you look at the economic numbers, it really doesn't suggest that things have been a game changer per se. I think there's still a lot of policy expectations that they will have to do more, whether on the fiscal or on the monetary policy side. So it's really very much market-driven, and the headlines, of course, revolving around the DeepSeek developments, a lot of hopes about AI, and the fact that if China may be closing the gap on the AI front with the US, notwithstanding a lot of the high-tech semiconductor chip curbs that are in place, I think that suggests that actually there are some silver linings for the Chinese economy.
But what are your thoughts on DeepSeek? Is it more hype? You know, in your research, in your conversations, how convinced are you that DeepSeek is indeed something to be watching out for?
I think the DeepSeek story is interesting, not just because it's a China play per se, but the fact that, you know, if you can do AI at a much, much cheaper cost, and if it's open source, I think that gives a lot of hope to the rest of the world. You know, it's not just China per se that's trying to basically up its game for the AI. So I think it is very, very promising. I think at the end of the day, you know, a lot of the hype that has sort of centered upon AI chip makers, I think increasingly that probably will move more to AI apps and developments and, you know, models going forward.
So you would be buying into all these AI-related stocks in China, you think? I mean, is that the way to go? We suddenly have seen such a run-up, such a rally in these stocks of late. Would you be a buyer? Would you be a dip buyer?
Well, I would be looking, but whether I would go in at this juncture, I think that remains to be seen.
Why not?
Okay, I think if you're talking about the Chinese firms, you know, there's still this trade war that's ongoing, right? And we have seen that even before the latest round of tariffs by Trump, you know, there was a lot of scrutiny about, you know, semiconductors and also, of course, the semiconductor equipment curbs. And they were basically trying to persuade other countries not to sell to China. And then within China itself, you know, the story is still one where there is a fair bit of regulatory scrutiny and some of the clampdowns that take place from time to time. So it's still very, very nuanced, I would say.
And when it comes to expectations of further stimulus in the Chinese economy, the NFC is front and center. A lot of expectations that new stimulus will be revealed by, when it comes to that. What are you anticipating?
Well, the policy tone has completely changed, right? I mean, they talk about extraordinary measures for fiscal policy. They talk about counter-cyclical adjustments. They talk about a moderately loose monetary policy. So a lot of talk. Generally, I think the expectations is that, you know, they will still continue to use all the levers they have. That would probably mean some stability measures for both the property market. They don't really need it for the equity market at this juncture. But as far as the domestic consumption story, is still very, very weak. So unless they can inject some sense of optimism into the labor market and, you know, turn around this whole lying flat phenomenon, I think it's still going to be fairly challenging for the growth story going forward.
Triple out cut, is it coming? Is it not coming? We've been waiting forever for it.
It does seem like they are holding that off for now. They really don't want additional pressure on the currency at the moment. So the tariff is already taking a bit of the toll on the currency expectations. So I think for that, maybe to just put it on ice for the short term. But we do think there is room to cut.
We have to look at China within the context of India as well. Whether it's coincidence or not, we're seeing that rally in China coming perhaps at the expense of the sell-off in India. Is that a right way to look at it?
Well, the way markets look at China and Indian markets tend to possibly be a little bit simplistic at times, right? If China is down, India should be up. You know, if China is up, India should be down.
Because we talk about the rotation.
That's right. So a lot of it is rotation plays. But I think if you look at the overall story in Asia itself, it's still very resilient growth, with the exception, of course, of some of the pressures on China itself. A lot of the, you know, China plus one, China plus N kind of diversification flows will continue. The more tariffs you have, the more, you know, manufacturers and companies will look for workarounds, and they will look for other places to expand or new markets to you know, go into. And I think ASEAN, for instance, remains one of the very attractive destinations for foreign direct investments and wealth, of course.
Selena, before we let you go, I mean, there is so much noise out there. If you take a look at a one-year perspective for the year, where will you make the most money? Which asset class is going to give you the returns that you're after?
Wow, that's a really tough question. I think we basically have to brace for a little bit of volatility on the bond side. But, you know, if the Fed really is serious about keeping rates on hold, possibly for the next couple of months, then I would say actually there is some value coming in at the longer end of the curve. But don't put all your eggs in that basket, yes. I still think that in Asia itself, there are some growth opportunities and sectors. I mean, even we talked a lot about the AI space in China, right? I think that's something that we can't ignore because it is a very, very big market there.
All right, diversify.
Yes.
Look for opportunities. Selena, thank you. Selena Ling of OCBC. Still ahead this hour, we'll be joined by Marriott International's Asia Pacific President. We're talking about Rajeev Menon. We'll get his exclusive insights on regional travel trends. Keep it here with us. This is Bloomberg. OpenAI CEO Sam Altman says a $97 billion takeover offer led by Elon Musk is a business strategy that comes from a position of insecurity. Altman told us he remains confident in his company's technology and strategy, despite the disruption from China's DeepSeek and the Musk bid.
OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff, now this. And we'll try to just put our head down and keep working. Does
it make it more difficult to move from that non-profit model to that for-profit model for OpenAI?
We're not moving to a for-profit model. We're not sure what we're going to do at all, but no matter what, the nonprofit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the nonprofit is not changing into anything or going anywhere.
And have you had clarity on DeepSeek? I know you and the team have been looking into that, whether they distilled, whether they inappropriately used your inferencing data. Have you had more clarity on that?
Whether they did or didn't,
they a challenge,
they
a threat?
Built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that, DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do. And we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's a happy person. I do feel for him.
Okay. Do you worry that he has this proximity to the president and that he can influence the decision-making of the US presidency and policies around this agenda on AI?
Not particularly. Maybe I should, but not particularly. I try to just wake up and think about how we're going to make our technology better.
A very candid Sam Altman, OpenAI CEO, speaking with our very own colleague Tom McKenzie at the Paris AI Action Summit. Let's take a look at how Asian benchmarks are doing this Wednesday morning on the back of the Fed saying that perhaps, it is going to be patient when it comes to cutting those rates. MSCI HPEC index up about 0.1%. Pretty muted gains at this point in time. The Hang Seng index, though, going up really strongly at 1 point, up by about 2%, driven pretty much by tech plays, as we have seen in the last 2 weeks. Alibaba, in particular, rising as much as 8%. Still to come. Marriott International's Asia Pacific President Rajeev Menon will be joining us with his insights on travel trends in Asia and the company's full-year outlook. Our exclusive conversation is coming right up. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside, and we're talking about my favorite topic, travel. Tourism in the ASEAN region has seen an uneven recovery. A key part of the equation is a slow return of Chinese tourists. Avril Hong joins us for more on this. And Avril, when it comes to the travel recovery, really, it is about China, because China contributes to a lot of the travelers in this part of the world.
Yeah, they're important for many of these top tourism destinations, key among them Thailand. I mean, you talk about tourism in the region, you can't not talk about the country. And it was interesting. I mean, just based on some of the latest figures for the month of January, we saw like a 22% jump from a year ago numbers on tourism arrivals. A lot of this was coming from Chinese travelers. And this is interesting because you might recall there was this high-profile trafficking of a Chinese actor, and he was forced to work at a Myanmar call center, and this was of course illegal, so some safety concerns, but it seems like Chinese travelers mostly shrugged that off based on the numbers. You look at the weekly tourist arrivals, the more recent data though, it shows you how Chinese traveler, after the Lunar New Year period that kind of tapered off, and tourism arrivals actually fell for Thailand. So it tells you how important the Chinese travel is to these Thai or ASEAN tourism markets. And it was also some of the top destinations for Chinese travelers. And if you look at the Lunar New Year period, we saw record train travel, we saw spending bouncing back. But what this also tells us is how they're traveling, they're spending, but they're mostly doing it at home. Outbound travel hasn't fully recovered yet. It's interesting, Thailand on its part, it's kind of been doing things to diversify tourism as much as possible. New customer segments, new source markets, India, Southeast Asia among them. It's added new holidays so that people travel over the long weekends. And interestingly, this week, we saw the Prime Minister saying, hey, let's review as well some of the alcohol sale timing restrictions, because that's seen as something that obstructs tourism promotion as well. Whether all these efforts are enough, are effective, that's a different question story.
That's right. A lot of things, a lot of factors at play. Avril, stick around. Marriott, the world's largest hotel group, has reported fourth quarter earnings. Let's take a look at the profit that beat estimates, with its international markets leading expansion. Southeast Asia is one of the company's fastest growing regions, getting a boost from outbound travel from China as well as India. Joining us exclusively, Marriott's Asia Pacific ex-China President Rajeev Menon. Rajeev, good to have you with us. We talk about how crucial the Chinese tourists are to this part of the world, especially in Southeast Asia. What are you seeing in terms of your numbers?
Well, Haslinda, first of all, thank you for having me again. It's great to be part of the program. Asia Pacific ex-China remains a bright spot for the company as well as from tourism industry at large. While Chinese tourism has always been very, very important, we as a company have always been also very focused on a hyper-local strategy of engaging with local members of the community, building up our loyalty base, which is Marriott Bonvoy, driven by the fact that there's a lot of foreign direct investment coming in this part of the world, particularly in ASEAN. There is pretty good economic growth, and you're really seeing growth in middle class. So Chinese travel for Marriott International in APEC, which is Asia Pacific ex-China, is about 10-11% of our mix. And we were fully recovered last year. And we are now seeing continued growth as we move forward. However, Asia Pacific ex-China intra-region travel is now almost accounting for 60% of our business, which goes to the point that the economic growth and the intra-regional travel is really what's driving much of our growth. When you think about last year, we delivered almost 13% RevPAR growth across Asia ex-China. ASEAN was a bright spot when you looked at the top 5 markets. Vietnam was at 22%, Thailand was about 15% RevPAR growth. Indonesia, Malaysia were close to about 14% RevPAR growth. So the region itself is very well positioned from a long-term perspective.
The question is whether the RevPAR growth is sustainable going forward. Can it accelerate? And when it comes to the numbers, they are great, but are the Chinese spending when they're traveling?
We are definitely seeing them spending. We are seeing, at least in our sector of the customer, the Chinese customer that we serve, is traveling. Both within ASEAN and other parts of Asia, like Japan and Korea particularly, and also Australia for that matter. I was just in Australia through end of January, and we saw that there was strong Chinese travelers heading towards Australia and New Zealand for that matter. So we do see them spending. We do see our recovery now well north of 100%. on just the Chinese travel basis. But I continue to highlight Asia ex-China is about 2.5 billion people. And there is incredible opportunity for growth. And from my perspective, this region remains decades-long growth story in the world of tourism.
So which are the specific markets that you're looking at in terms of expansion of properties and growth? I think you have, what, 150 in Malaysia or India. What are you looking at in terms of the numbers?
So India is one of the strongest growing markets in Asia ex-China. Really, when you think about the GDP growth, when you look at the growth in travel, last year we opened our 150th hotel in India. We are the largest operator by number of rooms in India. We also opened our 50th hotel in Malaysia, for that matter. So within ASEAN per se, we have 250 hotels open and another 175 under construction. And beyond that is Japan, which remains a very strong market for us. Again, from an international brand perspective, we're the largest player. We opened our 100th hotel in Japan last year and have a very strong pipeline for future growth. So when you think about where Asia Pacific is at today, we are seeing growth across the board. And that's partly because you are seeing a lot of investment, given the geopolitics that is getting played out. Not only US and other Western companies are investing in ASEAN, we're also seeing China investing in ASEAN. And as a result, you're seeing this travel boom that's coming across the board. And then on top of that, coming out of COVID, it's been clear that people are really prioritizing travel over other expenses. So you're seeing a little bit of, double effect in a positive way. And as a result, we expect this growth was going to continue. And as I said, January, we had a very strong start to the year this year with 19% RevPAR growth. Now, keep in mind, part of it is driven by shift in Chinese New Year. But I do expect growth numbers in this part of the world to remain pretty strong.
What about the specific segments, high-end luxury travel? I mean, a lot of that is pegged on this new wealth that's coming in. How do you see that as influencing some of the trends?
Coming out of COVID, luxury and leisure led recovery. It was very clear that you were seeing strong double-digit numbers. And even prior to COVID, we were seeing trends where leisure travel and luxury travel, particularly given the emergence of strong middle class and new millionaires coming up in Asia, pretty much on a monthly basis, the aspiration to travel is very, very strong.
Are you seeing that across the board in Southeast Asia or specific markets like Singapore, for instance?
So we are seeing that across the board. When you think about, we did research in luxury space last year, which we shared with many of our partners, and it was very clear that folks would travel for unique experiences. There was uptick in adventure travel. They were really focused on exceptional dining experiences, immersive dining experiences, and they would go to different cities, be it Kyoto or Bangkok or some of the other destinations which have some incredible restaurant or dining experiences. They would make an effort to go there just for that purpose. So experiential travel is on the rise, and luxury customer is taking the lead in that space.
How are you catering to that luxury market? How are you capitalizing on that trend?
Luxury remains a big focus for Marriott. In Asia Pacific, we had a record year last year of luxury signings. Almost 20% of our signings were in the luxury space. Globally, for Marriott, Asia Pacific ex-China, over 30% of luxury pipeline is in this region. So for us, opening stunning new hotels that cater to this market is critically important. When you think about last year, going into new destinations like Labuan Bajo, opening up a beautiful luxury collection hotel there called Takana, opening one in Lombok, or for that matter, in other destinations across Japan and Maldives. We recently opened a JW Marriott. These are some examples of how strong luxury is and will remain for not only us, but for the industry at large across Asia Pacific.
Rajeev, you touched on geopolitics earlier. When it comes to the tourism sector, are there any disruptions from the trade tensions from tariffs, or is this a sector that's kind of insulated from all this?
It's too early to tell if there is really any disruption. We're not seeing any signs yet. For us, what has been very, very important is to stay very focused within the region, because we believe the growth within intra-Asia, ASEAN, and then obviously China coming in, is going to be a critical factor for our long-term success. So when you think about our loyalty program, Marriott Bonvoy, that today has 228 million members globally, a large base is here in Asia. We've seen 50% growth in membership between 19 and 23. Just last year, towards the back half last year, 70% of the occupancy in our hotels was driven by our Marriott Bonvoy customers. That's the power of loyalty. So from our perspective, we will remain very focused on the region from long-term growth point of view.
As a result of the tariffs and geopolitics that Avril mentioned, we've seen a very strong dollar environment. As a traveler myself, I do consider the strength of my own currency before traveling to destinations. I'm just wondering how Southeast Asian markets are benefiting from that strong dollar. I would imagine those sitting in the US would be finding this region attractive. Those sitting in Asia would rather be traveling around the region too.
So Haslinda, you're absolutely right. We are definitely, US travel bounced back very quickly for us, fully recovered. In fact, US consumer is about 18% of our mix. Being home-based in US, we are very strong when it comes to the US customer. Countries like Japan, when you think about Thailand, as currencies have been weak or depreciating, these, from a tourism perspective, these countries are on discount to some degree. And you see increased travel from US, but also, to your point, Asian travelers are enjoying and staying within the region per se.
All right, Rajeev, we have to leave it there. Rajeev Menon of Marriott International. And of course, we have Trump currently speaking at the White House. He is referring to the developments in Russia. Of course, this probably has to do with that situation in Ukraine. We heard earlier, of course, how Treasury Secretary Scott Bessent is traveling to Ukraine to meet President Zelensky to discuss U.S. efforts to resolve that situation. Let's listen in to what he has to say there.
Perspective on Putin and your attitude.
Well, I don't want to get into that. I only can say this. We got a man home whose mother and family wanted him desperately, whose state wanted him. He's become a big symbol. And it's an honor to have played a small role in that. And I want to tell you, these people, they all played a role. And we got him home, and he's healthy. It looks good, actually. To me, you look damn good, I'll tell you that.
I think when expectations are low,
Yeah.
maybe that helps a little bit.
When you go kaplunk, right?
Can you tell us about the conditions in the prison that you were in, sir?
I think I need a little bit of time to sort of digest all of that. There were times when it was extremely trying. There were times when I could manage it, but I think I need some more time to, process it.
It wasn't easy, right? It wasn't easy.
Every second, every minute, every day had a challenge.
But you're in good shape. I mean, compare that to what we saw 2 days ago come home. They were very, very ill. Those people are very ill. They were treated really badly.
Mr. President, your predecessor left you almost $4 billion in unused aid for Ukraine. Are you going to use those money? Are you going to
We're going to
send
see, but my
weapons to
predecessor
Ukraine?
should have had this gentleman out a long time ago. We did it in 2.5 weeks. He had 4 years to do it. He should have had Mark out a lot earlier. It's a shame. It's a shame.
It was very...
Should have never had the war to start off with. Should have never had, that war would have never happened to Vice President, but he should have had him back 3.5 years ago. So it was too bad, but he didn't do it, but we did it. Thank you all very much. Thank you very much. Come on.
Mr. President, are reciprocal tariffs still coming tomorrow?
Welcome back. Venture financing for AI raised far ahead of climate tech startups in 2024, although the two almost on par the year before. Green Ventures received just a third of the $100 billion that went to AI funding last year, and that's due in part to the ability of tech companies to maintain high margins and achieve profitability over a shorter time frame. Let's get more perspective on the challenges for climate tech. Bloomberg's Menaka Doshi joins us live from India Energy Week in New Delhi with our next guest. Menaka, take it away.
Well, thank you for that, Haslinda. Like you mentioned, I'm here at the India Energy Week, and I have with me the head of a company that converts carbon and industrial gases into more sustainable fuels. Jennifer Holmgren is the CEO of LanzaTech that has partnerships with a variety of Indian companies, and we're going to talk about the scope of this space over the months and years to come. Jennifer, do you feel that the mood is a bit muted when it comes to clean energy tech, especially given the walk back that President Trump has done on a variety of these measures? You would know because you, in fact, have a partnership with the U.S. government agency.
You know, that's absolutely right. There is a subdued mood about the meeting and the industry. But I have to tell you, the Minister of Petroleum and Natural Gas here, completely pragmatic approach to creating a new carbon economy which benefits his people. And that requires new sources of carbon, new sources of energy, etc. So it may be subdued in other parts of the world, but I think the leadership in India, all the way up to Prime Minister Modi, is still pushing hard to do something that helps everybody in India.
I'll come to the India business opportunity because you have a bunch of partnerships here. But first, let me go back to the beginning of the first question that I asked you. How much of a knock do you expect companies like yours will take because of the reversal in sight in U.S. policymaking?
You know, there has to be a knock-on effect because the biggest issue is uncertainty. People just don't know what's really, really going to happen. And when there's uncertainty, new things, growth is very tough, very tough. So yes, I think there will be impacts, projects will be delayed. But like you said, fortunately for us, we're a global company. So if the United States swings in one way, we can still work in India. We can still work in other parts.
Are you seeing or expecting project cancellations in the U.S.? You do have one or two projects that are in partnership with U.S. government agencies. And I think they're being funded by U.S. government agencies as well.
That is correct.
So are you seeing that funding being rolled back already?
They have not yet rolled back any funding that we have for the project right now. Do we worry about it? We're continuing to move ahead. It's always a possibility, but we have seen no indication of that.
But broadly speaking, do you believe funding for clean, green energy tech will become very challenging in the years to come?
I think it could be, but you have to not talk about it as energy tech or clean tech. You know, what really matters to the U.S. government is what matters to everybody else. Jobs, 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 elevating everybody's quality of life. The IRA had a lot of elements that were about quality of life, about jobs in the rural economy. And if we stop talking about it just like climate change, I think we will be fine. If we say all we're doing is climate change, I think there's going to be a lot of headwinds, a lot of headwinds.
Okay, I have a couple of minutes and I want to focus on India. You did a joint venture with Indian Oil Corporation. The Panipat refinery has, you know, a sort of a carbon processing facility. You're now working with NTPC as well, I believe. There was a partnership in the works with GAIL. How big is the scope in India? What kind of money are you putting to work here?
You know, for us, India is a really exciting market. It's a growth market, period. And because it's a growth market, that means everybody wants to do new things. And they can, because the infrastructure for the old things isn't there. So it's a massive opportunity. And
could you put a number to the size of the opportunity, Jennifer? At least for companies like yours.
Yeah, I think it's in the hundreds of millions of dollars by the end of the decade, for sure. I think it's massive.
All right, Jennifer, thank you so much for speaking with us, and all the best with your India plans. With that, I'm going to check it back to the studio.
Manakadoshi, thank you so much for that. And of course, we have much more coming up from India Energy Week in New Delhi. We speak live with Oil India Chairman Ranjit Jaff. That's at 1:30 p.m. Hong Kong time. And later, we'll hear from Petrobras CEO Magda Chambria. And of course, here's a look at our show tomorrow. We'll speak with Treasury Wine Estate CEO Tim Ford as Australia's biggest wine producer navigates growing global trade as well as geopolitical uncertainties. You do not want to miss that conversation. In the markets, we're keeping an eye on U.S. Treasuries, of course, on the back of Fed Chair Jerome Powell saying that he is in no hurry to cut rates further from here. He's awaiting more clarity on Trump policies as well as Trump tariffs. Of course, it is about how yields are trending higher. We have two-year yields at 429.58 and U.S. 10-year yields at 454.54. Investors now looking ahead to that CPI print to perhaps gauge the trajectory of Fed moves from here. Money markets still fully pricing in just one rate cut this year, and that is by September. It is about patience, and that's according to Jerome Powell. Here in Asia, tepid gains in terms of the markets in Asia. The MSCI up just marginally a tenth of 1%. If that, the Hang Seng, though, is the outperformer today, as it has been in recent days. It is driven pretty much by the tech plays that drive from DeepSeek, which is driving the sentiment and optimism in the tech space. Alibaba, of course, one stock we've been tracking. It is up by about 8% today. What an outperformer. It is expected to gain from that AI play. And in terms of the Nikkei 225, higher, the Kospi up by 0.2%. Again, trepidation, though, when it comes to markets here in Asia. A lot of the currencies under pressure from that strong dollar, which eased yesterday, but not enough to turn around the story of Asian currencies. And that is it for Insight. Horizons Middle East and Africa is next. Do keep it here with us. This is Bloomberg.